In this video, I'm dealing with a finance topic that scares a lot of children, statements of financial position, also called balance sheets. Now, on my screen, you can see one, and it's pretty easy to see why it scares a lot of children. Even that one that's from an IGCSE textbook looks scary, and they vary across different syllabuses and at A-level, so it confuses people. That's why in this video, I'm going to be breaking down exactly what they're all about, the idea behind them and why they're so important. I'm going to show you how you can make some simple calculations and most importantly, how you use them to make decisions. I'm going to do it in the form, as ever, of a silly story, and in this one, a silly and marginally offensive game that I want you to play along with me. As ever, if you don't understand anything, just write it in the comments, give the video a like and a follow, and you'll find loads more content on the channel. As promised, here is our ridiculous game that we're going to play. Now, it's going to seem totally weird, I know that, but that will stick in your head. And bear with me, I'll wrap it all round into the full business at the end of it where you should fully understand it. So stick with it. Now, the game we're going to play is you are going to be a gold digger. I'm going to get all the names wrong and all of those things and genders and whatever, but just stick with it, just pretend and play along. And when I ask a question, I recommend that you pause the video, think about it, even write it down, because it's going to be good to reflect on your answers, because I might well have tricked you in the video. Let's see how we go. So, in my story, you are going to be a gold digger. A gold digger is someone who is marrying for money, a horrible thing. And you're even worse than that. You're someone who's currently dating 3 people, but you're deciding which one of those to marry. Now, you're dating Annabelle, age 20, Betty, age 20, and Carla, age 20. They are all the same in terms of personality. You can't split the difference. In terms of how they look, you can't split the difference. You're going to make it purely on a decision based purely on who is the richest. You are a horrible person, I'm well aware of that, but we're going to play along. Now, it gets worse because you've been sneaking and following behind them, and you've followed them to an ATM, a cash machine, and you've spied on them with binoculars to look over and see what is their available cash. You say, I know, to find out who's the wealthiest, I'm going to see how much cash they've got in their bank. We've got Annabelle, you look over her shoulder, she's got 100 euros. We've got Betty, who's got 50,000 euros, and we've got Carla, who's got 1 million euros. Now, question number 1, pause the video and write it down. In that case then, simple, easy, which one are you going to marry? Now, I imagine you've made your decision. If you're anything like the children in my class, you're going to come back and say, well, this is so easy. It's Carla, obviously. Why? And I say, well, yeah, I know that, but why? Let's put some words. And they say, well, Carla, because she's rich, she's wealthy. And I say, but what about Annabelle? And they go, no, Annabelle's so poor. I don't want to be with Annabelle. Annabelle doesn't have any wealth. Okay, we're now on to round 2, where you do a little bit more snooping. So in round 2, we have the same situation, but you find out a little bit more information. Perhaps at this point, if we play along in my class, you've been and seen Annabelle and Betty and said, goodbye, I don't want to date you anymore, and you're firmly on track to marry Carla. Okay, but here's some more information. Does this change your mind? Can you change your mind? Can you go back and speak to the others and say, I was wrong? Here we go. Annabelle owns 3 large houses. We've got Betty, who owns 1 small house, and we've got Carla, who lives with her parents. Again, next question, stop, pause the video, have a little think. Does this change your mind? Now, at this point, I don't know what you've decided. Some of you are going to say yes, some of you are going to say no, but you've got a decision. But are you still describing Annabelle as poor, like you probably did in the previous one? We've started to think that, hang on a minute, maybe wealth shouldn't just be judged on the amount of cash in the bank. We also had to look at what property they had. Okay, well, you make your decision. We're going to go to round 3, though. I'm now going to give you a little bit more information. So, same deal, but here's some extra information. Annabelle owns a student loans company, 4,000 euros, but no time limit. She can pay at any point over the course of her life. We've got Betty, who owes the bank 50,000 euros for a loan she took out recently, and she's got to pay it in 1 year. She owes 50,000 euros. We've then got Carla. Carla has 500,000 in credit card debt. has to be paid pretty soon, a credit card, or bit installments have to be paid. She's got a bank loan of 800,000 euros that has to be paid in 1 year, and she's got car repayments of 250,000 euros. Okay, pause the video now and have a think, who do you want to marry? Now again, I don't know who you've chosen here, but what I hope I've done is trapped you with some of the statements earlier on. When we were looking at wealth, you described Annabelle as poor and Carla as very rich, as loaded and jumped. But I think you're probably now seeing, well, Carla isn't very rich at all. In fact, they've got some serious money problems. They may have 1 million in cash, but they have debts that they need to pay soon that add up to way more than 1 million. So essentially, they've got less than zero. They've got real money problems. Then you've got a decision between this Betty and Annabelle, but it doesn't seem that we could call Annabelle poor because, okay, she only had 100 euros in cash, but if she's got these 3 large houses and let's say each house was worth 2 million, we could just sell one of the houses, get 2 million in cash. She doesn't seem to be poor, and that bank loan doesn't really seem to be a problem. So when we're looking at wealth of people and of businesses, you shouldn't just be thinking about cash they've got. That's a classic mistake. You need to consider other things. But the game is not quite over. We've got one more round. Make your decision. I hope you've already made it who you're going to marry. Now, here we go. The final round. Now we've got Annabelle. She's got all the things before, but she bought the 3 houses with money she made from drug dealing. Told you it's a silly story. Okay. We've got Betty, who's 20, remember, and she bought the house by working hard and saving money since the age of 16. And we've got Carla, she's never worked and the money was given by her parents. Right, I'm hoping at this point, this firmly changes your opinion on the story. I don't know who you're going to choose, but I would suggest now in all of this, I've tricked you, and I'm hoping the most sensible option would probably be Betty. Some of you, if you're like the children in my class, go, nah, I'm still going to go with Annabelle. She's got all of those houses from drug dealing. But that is what we would say low quality money that could be taken off by the police. It's illegally gained and could be taken. Could risk it, but it doesn't sound like a good investment there to go with this person. That money could be gone. We've got Carla, terrible. She had cash, but it's come from, yes, being given the money, low quality. And we've got Betty, who's made this money herself. She's only 20, and since the age of 16, she's managed to save up enough money to buy a house. Whatever she's doing, she must be very good at it. And she can buy herself a house at the ages of 16 to 20, my goodness, she's going to go on and make a lot of money in business or selling or working in the future is the idea. And I would suggest that in this gold digging story, Betty is your best person to get married to. What a terrible, unethical story. Now though, let's tie it back to how it relates to business and statements of financial position. So a statement of financial position shows the value of a business's assets and liabilities at a particular point in time. Now that's what we've just done in that story. We were looking at a person's wealth, but these statements of financial position show the wealth of a business at a particular point in time. Cash flow forecasts and profit and loss statements don't cover those things. Cash flow forecast how much cash they'll have in their future, not wealth, but cash. And profit and loss just show the profit that was made over a period of time, over the last year or the last month. They don't talk about how much wealth. You want to know wealth, you've got to look at a statement of financial position because you need to know all of these terms. You need to know these things. You need to know non-current assets that the business has, the current assets the business has, the current liabilities, the non-current liabilities, and you also want to think about where all of that money has come from. Now they sound complicated terms, but let's just break it down. An asset is a good thing. If I said you're an asset to the classroom, that would mean you're a good thing into having a classroom. But if I said you're a liability, well, a liability would be a bad thing. So we've got assets, good things that people have. So non-current means that you've got it for a long period of time, something that will take a long time to change into cash. So buildings and houses are non-current. They're good things to have, but you've got them, you expect them to last longer than a year. So a building or a house. Then you've got current assets like cash, well, that you can use quickly. Cash is certainly good. Then you've got current liabilities bad, and they're debts. That means debts that have to be paid in under 1 year. And then you've got other debts that maybe aren't so urgent, debts that can be paid over a year, maybe over the next 10 or 15 years. Then we think about where they are. So to know all of those things, we need to look on this complicated document, this statement of financial position. So if you were interested in investing in a company, or you're a government looking at the wealth of the company, you need to look at this document because you'd want to know all of the answers to those things if you're the owner of the company. So you can see they take different forms across different exam boards, across different accountants, but they should all contain this information. In this one from the IGCSE, we can see it's broken down into 2018 and 2017. So if we just ignore 2018, we'll just look at this column 2017 here. We can see, hang on, we need to know the non-current assets. Just like in that story, how many houses did Annabelle have? Well, we're going to look for this section. Non-current. It could be down here, it could be hidden anywhere, but there will be a section for non-current assets. Then we've got current assets over in this section. Then we've got the liabilities, usually go below, and we will go and look into breaking those liabilities, those debts down into current liabilities and non-current liabilities hiding here. And then finally at the bottom, this is the part, bit complicated, that shows us, well, where did they get that money from? So if we look at Annabelle to compare it to these things, because we could put her into this table, it's more simple than the one here, but Annabelle, a bank balance, well, where would that go? Bank balance cash is current, and therefore we would drop it into this section. If you were to draw one up for her, it would come into this section. We then said, well, we also know she owns 3 large houses. That would be dropped into this section as a non-current asset. Then, she owes a student loan, but important, no time limit, so that would go into the non-current liability. Then, has she got any more liabilities in red? Well, no. So she actually didn't have any current liabilities. That's pretty good. She's got none. And then she bought it with money from drugs down here. Okay, so all of that information, if you were to draw up a statement of financial position for Annabelle, you would add it in those cases. If we look at this, though, in a bit more detail, then they used to be called balance sheets, still are in many places, in fact, because governments are particularly interested, could be other people, but they're particularly interested in saying, okay, well, this essentially is your wealth that you're saying in 2017 you had a wealth of, and I'm using that term very inexactly like I did previously, of 820,000. Okay, 820,000 here because we had the assets adding up to 1,011 here, this number here. And then we had liabilities to take away because you didn't have those, but you had a sort of net amount. And again, different terms with different syllabuses, but we're going to just say wealth of 820, okay. But then it's legitimate to ask the question, well, if you're saying that at this point in time, when they did it in 2017, at that point in time, you're worth 820,000, your wealth is, where did that come from? Can't just come from magic, you must have got it from somewhere. So if we look at this, this is where we call it the shareholder's equity or shareholder funds. This one's quite interesting here. They said, well, the money came. Yes, we did have 820, and this is where it came from. We had 500,000 came from share capital. That means shareholders invested that money. They just gave that money to the business, and 320,000 came from retained profit reserves from previous years that we'd made. So 500 plus 320, that adds up to 820. Great, you can balance it then. It therefore justifies all the amount of money. So the governments are happy. Yes, we can see that you're running this legitimately. Those two things balance. But when I was talking about drug dealers before, because if you're assessing the business, you're also going to say, well, you know what? Yeah, you might have money, but is it good quality profit? Is it good quality money? In this situation, what do you think? 500 they were just given by shareholders, and only 320, less than half, came from actually earning it, from doing the job, as it were. Do you like that? Well, there's no right answer. Some people might say, well, yeah, it's good because it shows people are confident and it's going to get better. We like that idea. 500,000 has been invested by people with confidence. Or you might say, but no, that's not really making money. Only 320 is made by doing the job, and therefore we're not confident in it. Okay, so that's Statements of financial position covered. As I said, they vary everywhere, but what you should have got from this video is an understanding of what to look for and how they work. You can then take that back to the key terms and the new definitions as they change. And don't be scared of them. If you're looking at an IGCSE exam, they're going to be so much simpler. Although the books put these exams, if you look at past paper questions, which we'll do in another video, they are so much simpler. I hope it helps. Write in the comments any doubts that you've got, if you want any other videos, and see you soon.